Hey guys, this is David with Average Joe Investing, and today we're going to talk about something that I know a lot of you guys really like, and they've gotten really popular lately. That's going to be those stocks that pay dividends every single month. And while yes, it's absolutely fantastic to get dividends every single month so you can reinvest in the portfolio and kind of build your holdings, but a couple things to keep in mind is that a lot of these companies are either paying as much as they're making or more than they're currently making in earnings per share. So it's not sustainable, and they either have to sell off assets or give away some of their cash balance to kind of maintain those high dividend payouts. And besides that, the other issue you're going to run into with these companies is that because they're paying out all of this money, they really don't have as much to reinvest and kind of grow the company. So they don't have the money to either acquire a different company or to, reinvest back into the company and buy more holdings, buy more assets to go out and make themselves even more earnings per share. But anyways, I know a lot of you guys really like these stocks, so let's take a look at 10 of them. And I know some people have kind of talked about these on their channels. I'm going to try to go a little bit more in depth. I'm using dividends.com, and I'll show you guys when they started paying out these dividends, it wasn't 3 months ago. Some of these have been going on since like 2004, 2005. And then the other thing I'm going to show you is how much they're actually paying out. So, are they only paying out 70% of their earnings per share? Or are they paying out 3, 4, 5 times what they're actually bringing in? But anyways, guys, let's take a look at those 10 stocks. Now, we have 10 stocks to go over, and I don't want this video to be 25 minutes long, so we're going to have to go through them relatively quickly. But up first is going to be Gladstone Investment. Now, this is a stock we've talked about before on this channel. We're taking a look here, about $9.28 a share right this second. It's up 11.79% over the last year. So good amount of growth out of this one if you add in the dividends. And this company is currently paying out 8.28% in dividend yield. And obviously that's divided out by 12 months. I think you're getting about 6 cents a share off these guys per month right now. And this is actually one of the companies that have been doing this for a while now. They started paying out monthly dividends in July of 2005. So it's a company that's been doing this for quite some time now. The only downside, and this is kind of only in the short term right now, they are paying out 109.7% of their earnings. So currently, they're actually paying out more than they're bringing in. So it could be a little bit risky there. They might have to drop the dividend yield, or they might have to change a couple things around. But our first one's going to be Gladstone Investment. Second stock we're going to talk about is, I think, the only other one we've actually talked about on this channel, and that's going to be Student Transportation. Now, these guys pay out a 7.42% dividend, and again, it's paid out monthly. So you're only getting about 3 cents a share on these guys, but you're also looking at under $6 a share right now. So that's not too bad. These guys started paying out dividends in September of 2011. So we're right at about, that 6-year mark. So it's a company that's been doing it for a little while, but not kind of extensively for years and years. Now, the scary part about these guys, I don't know if it's just something that happened just this last kind of earnings or whatever, but they're paying out currently over 600% on what they're actually making. So they're paying out 628% of their earnings per shares. So obviously this is either going to be one of those situations where the dividend payment's going to have to go down, or they're going to have to start selling off assets or really kind of throw out all their cash balance. This is one that I'd be kind of scared of right now. And if you take a look at kind of these big drop-offs, these peaks and valleys that are happening with this company, it's something that, at least a couple other people are concerned about right now. About 5% dividend right now. They started paying out in September of 2013. And nice thing about this company, currently they're only paying out 83.4% of their earnings. So they do have some money to either reinvest or potentially maybe even up that from the 4.99% to something around the 6% range in the future. Up next, going to be Main Street Capital. Now this is going to be one of the more expensive ones in terms of actual share, the price per share right now. But they do pay out just under a 6% dividend yield right now at about 5.75%. They started paying in September of 2013 as well. And these guys are paying out pretty much their entire earnings. 99.1% of their earnings right now are going back to the shareholders in terms of dividends. Chatham Lodging Trust is another one I've seen quite a few people talking about. We're looking at a 6.66% dividend yield right now. And these guys have been paying out since August of 2013. And another one that, maybe they can grow something in the future, or maybe they can start building up their company a little bit. Because if we take a look, they're only paying out 61.1% of earnings back out to the shareholders. Now, the next one, it's a little bit hard because they started paying out in December of 2003, but that was back when they were actually doing quarterly dividends, not monthly. These guys actually started doing monthly dividends in 2005, so still pretty good. 7% yield is what they're paying out right now, and they are definitely paying out pretty much everything they're making, about 98% right now. But as you guys can see, this is probably one of the better ones in terms of growth right now. And that's because they're up almost 30% just on the year in terms of regular kind of organic growth. That does not include the 7% dividend yield. WSR is going to be a REIT, which means that we're kind of already expecting these guys to pay out pretty much everything that they make. So if we take a look right now, they're paying out 8.83%. They started paying out in August of 2013 as well. And like I said, REITs kind of are under their own special thing where they pretty much had to pay out everything they make. And, you know, obviously they can keep some money for doing certain things. But right this second, they're paying out at 109.6% of earnings. So this is another one that's going to have to do some kind of adjusting here kind of going forward because they're currently paying out more than they're actually making. And up next is going to be another one of those royalty trust. And if we take a look here, another one that's kind of a little more expensive to get into, about 39 bucks a share. But these guys are actually paying out 6.59% right now. And it's another one that's been doing it for a while. So we're looking at about August 2013 when this one started. Now we're going to start getting into kind of the real risky ones. Take a look here at PSEC, and they pay out an astonishing 13.75% in dividends. And obviously that's divided out by months. The one kind of redeeming factor is these guys have been paying dividends since December of 2004. So it's a company that's been doing it for a while. But 13.75% is absolutely astronomical. There's no way that's sustainable in pretty much any business or any kind of format. And currently, they're actually paying out more than 100% earnings at 114.9%. So again, guys, yes, it's great to see these things, but this isn't going to be super sustainable. And especially when the market starts to come down a little bit, a lot of these guys are going to lose a lot of value, and it's going to make that cash balance a lot harder to pay off. The last one we're taking a look at here is PFLT. And as you guys can see there, about $14.34 a share. So kind of a pretty consistent pattern here. A lot of these ones that pay off pretty high dividends, they're actually relatively cheap stocks themselves. But again, this company currently paying over 8% at 8.05% dividend yield right now. They've been paying out since June 2011. And we're looking at about a 99.1% payout ratio in terms of kind of the earnings per share compared to what they're paying out. So again, this is one of those ones that, yes, it's up 19% this year. But again, the market's been doing absolutely phenomenally this year. And definitely, if you guys want to invest in one or two of these, that's fine. But please don't make your full portfolio nothing but stocks like this. So I'm actually going to kind of cheat a little bit here and throw in number 11. And that's because I don't know how I skipped these guys when I made the initial list. And that's going to be the Income Delaware stock here. It has the ticker symbol, just the letter O, and it's been paying out dividends since 1996. That's 21 years of actual solid growth, because this is one that the dividend payment's actually growing on it. And if we look, they're only actually paying out 84.6% of their earnings. So it's another one of those stocks that can definitely kind of increase that going forward. And right now they are only paying out 4.44%. But again, this is one that's been growing. It's been one that's been doing it for years and years. So it is one of those stocks that's going to do it long term. And honestly, the one reason why I'm not nearly as hot on this stock as a lot of people are is, well, yes, it's nice to get that monthly dividend. Again, 4.44%, but it lost over 9% in the last year. And if we look over the last 5 years here, definitely good there. But, you know, investing, if you're getting into the game now, maybe it's time to buy it because the stock's on sale. I don't know. The earnings look pretty good for this stock. But unfortunately, they're kind of having a little bit of a down year, at least a down time right now. So again, guys, these are just 10 stocks. There's a bunch more that pay out these dividends every single month. And I'm definitely not saying don't invest in these. What I'm trying to say is don't invest only in these. You can absolutely build a portfolio with, you know, 20%, 10% of your kind of holdings being these stocks that pay out every single month. But don't do 100% of them. Because one, like I said, these aren't always going to be super sustainable. Some of these guys are going to pay out more than they're bringing in, or they're just going to have to cut that dividend payout anyway. And because they can't reinvest to build the company, the other issue you're going to start running into is you want your growth to be 10, 15, 20% year over year. Well, if they're paying out 8% in dividends or 9% in dividends, you're probably not going to get a 10% growth on that company. A lot of these companies right now, they're kind of growing because the whole stock market as a whole is growing, and a lot of people are really into these stocks for some reason recently. So they're trading a lot higher than they should, but it's not sustainable. It's not something that's going to stick around that price point. A lot of these, as people start to see it, and a couple of them already started to kind of fall off that cliff. When it's not so hot anymore, these drop in price, or they kind of just stay flatlined. So you're not going to be getting that 10% growth you need to compensate for the fact that you're only getting 5, 6, 7% dividend yield out of these. But anyways, guys, I've been David with Average Joe Investing, and I'll see you guys soon.